You had people think that housing could do nothing but go up. And you had a $20 trillion market in residential housing. So it was a big, big asset class. And people started using it as a currency, basically. And they found out that it wasn't straight up, in the end. They borrowed on them. And there were levels of participation up and down the line. I mean, people at the top were writing mortgages that they knew they'd never have to hold, so they'd sell them to somebody in Norway after they'd been put in a package. And you had people refinancing, figuring that it didn't make any difference whether the monthly payments were too high, and you had them lying on loans, and you had the lenders participating in it. And you basically just had a huge speculation in housing, and 50 million of the 75 million owner-occupied homes in the United States were mortgaged, 25 million were free and clear, so they were okay. But you literally had a crash in the value of something that 50 million families owned on margin, had thought were going to go up. They'd based their living standards on it. In many cases, they'd borrowed against it. And it was unlike any widespread financial participation anybody had ever seen. So it manifested itself in all kinds of ways. I mean, everybody behaved badly, but they believed, and when people start believing something kind of crazy, you get that sort of thing. I wasn't worried because I've always assumed that in a lifetime of participating in the American economy, it's going to move forward dramatically over time, and also it's going to have a lot of hiccups. And, it's part of our economic system that we will periodically have some craziness go on. And so I don't try to predict markets, or I don't try to predict business. I just try to adapt to what comes along. I did see in the summer of 2008, I got a call from one of the top officials of one of the main Wall Street firms trying to sell us many, many, many billions of dollars worth of equity securities in Freddie Mac. And I knew something was wrong. I just saw a lot of things that made me very worried about their financial condition and what would be happening to them under the circumstances that were happening in Wall Street. I said that don't count on us. They know we'll act fast if we like something. So we are the best fast buyer for anything that involves in the billions of just about anybody. Long ago, some Fed chairman told me that whatever the Fed thinks it can do, it can do. Now, that may have changed some under Dodd-Frank, but that was the prevailing view of at least one Fed chairman was. I think if I were chairman of the Fed and I saw what was going on in the United States then, I think I would have done it whether I could do it or not. I mean, are they going to come down? The Supreme Court going to send down some guy to arrest me as president of the Fed? I mean, I would feel it would be an act that I should do in the interest of the country if I were in that position. They'd have had to guarantee so much of public opinion. Can you imagine public opinion if all of a sudden, people are losing their houses and facing being underwater and all kinds of personal problems, and all of a sudden you've guaranteed that everybody at AIG is going to be okay and everybody at Lehman's going to be okay. I'm not sure it would have been very tough to do. I think that Bernanke, I think that Hank Paulson, I think that Tim Geithner, and I think George W. Bush did the right thing. I think they were heroic, but you weren't going to sell that to the American people. When Lehman goes, the big commercial paper holders were money market funds. I mean, these things were just hitting one after another, and both Hank and Bernanke had to worry very much about the congressional reaction to anything they did. Congress really didn't get it. George Bush got it. I give him great credit. I didn't vote for him, but I give him great credit for understanding just how big the problem was. I did think that we were in very good hands. Congress was the one that scared me. I thought we were in good hands at the Fed. I thought we were in good hands at the Treasury. I thought we were in good hands at the presidency. And I thought that Goldman Sachs was sound under any situation except if markets just totally were closed up.
When you look back in retrospect, is there anything you wish that you had done that you didn't do? Any investments that you wish you could have made, given?
Well, I can look back on any week and come up with that. I mean, the situation, we'd have been better off, considerably better off at Berkshire if we waited 4 or 5 months to buy anything. I mean, the low was set in March and it was much lower than that. I wrote that op-ed for the New York Times in late October. It was right on a long-term basis, but it was way off for 3 or 4 months at least.
Was there ever a moment that you thought that the system would gum up so much that that we would be back in sort of a Great Depression, that there really would be red lines?
It could, if mishandled, it could have lasted quite a while. It wouldn't have lasted as long as them, but it would have really gummed things up. There's no question. They're already gummed up, but it would have, at some point, the government has to step in. I mean, when everybody in the world wants to deleverage, there's only one party that can leverage up. There's just one party. And if for some reason they don't do it, you've had it.
And when you look back now, is there a great lesson, you think, for new generations of people who are going to hopefully learn about and think about this crisis?
No, because the answer is people have always panicked. I mean, that's why they set up the Fed. That we had all kinds of panics in this country in the 19th century. When people are afraid, they are afraid. Confidence comes back one at a time, but fear is instantaneous. And it doesn't make any difference how sophisticated people are, whether they've got PhDs or anything else. When they are afraid, they are afraid. I know a number of people that would surprise you who during that panic period subsequently, went right to gold and felt that nothing would be worth anything. And, I mean, people really, fear is extraordinary with most people.
Do you draw any parallel or connection between the crisis 10 years ago now and the politics of today and the distrust of institutions and governments? And
sure. People have long memories, just like they did after 1929. It took a long time. I mean, people, when they've experienced extreme fear, it sears something into them where they want to know who did it to them, and they correctly don't blame themselves. I mean, they're not supposed to be finance experts or anything. All they did was buy a house and lie a little bit on their loan application. Just figured it was going to go up, and then they'd refinance and so on. I mean, who's going to blame anybody for that?
Is there anyone to blame for the crisis? Because that's been also a political...
You can blame a lot of people for doing very foolish things, but I don't think anybody was... I mean, there's a certain number of people who are doing crooked things all the time. And to some extent, they were attracted to the real estate market because the money was flowing so easily. I mean, when you can create a mortgage, in Bakersfield, California, and sell it to somebody in Norway, and then when you get these permutations of these things where you get one instrument that's dependent on another instrument. I made a calculation once on one security I saw that had been raided by the agencies, and I'd had to read 300,000 pages in order to understand both the primary security and then the ones that it was dependent on and so on. And it just gets, and nothing goes wrong for a while, so everybody gets used to doing it. It'll happen again.
Do you worry about another crisis?
Well, there'll be one sometime, but no, I don't worry about it in the least.
Because?
Because I conduct myself so that if there's another crisis, I'll still be around. Berkshire will be in good shape.
What do you look around today and say, okay, I got to be anxious about that?
Well, asset appreciation draws in people that really don't know anything about the asset. And people start being interested in something because it's going up, not because they understand anything else, but the guy next door who they know is dumber than they are is getting rich, and they aren't, and their spouse is saying, can't you figure it out too? And I mean, it is so contagious. So that's a permanent part of the system. But in terms of the specific excesses, I don't see them now, no.
Are we better prepared for another crisis? Do you look at either the regulations or?
That's an interesting question, because I've never read Dodd-Frank in its full 2,000 plus page. I've read little summaries. I have the impression, and I may be wrong on this, but I have the impression that it somewhat weakens the ability of the Fed to act promptly and unilaterally. And I would say that's a terrible mistake. And we need a powerful Fed. You may not like them, but they may do things that bother you, but you need somebody that, if this country with now 100 trillion of household wealth, with now 75 million plus, that it doesn't come to a stop because everybody's trying to deleverage.
Was there ever a moment in that week where you, either between everybody calling you or talking to you, you thought, wow, this is... Well,
I described it actually on CNBC as an economic Pearl Harbor. That's not a term I've ever used before. So, I mean, I felt it was something different than I'd ever seen. And I felt it was actually worse than 29 in a sense, in terms of the immediate panic that was induced. In 1929, if you remember, in September 29, the Dow hit a high of 381. Then it collapsed in the fall. But I was born August 30th, 1930, and it was back up to 250-something by that point. I mean, it didn't hit that many people. It hit everybody on Wall Street, but Wall Street wasn't as broad then remotely as it is now, with 401ks or whatever it may be. So this homes, that touches everybody.
Well, they're all a little different and they all have similarities, but this one obviously had more of its origins in the mortgage field and in terms of the residential real estate bubble, but the troubles that begin in one area have a way of spreading to other areas. But I would say that in my lifetime, I can't remember one where this particular residential real estate bubble has sent out the shock waves and the exposure of other practices elsewhere as to their weaknesses like this one. But I don't think there's any magic to the analysis or anything like that. I think that some stupid things were done that won't be done soon again, and they won't be done exactly the same again, but variations of them will pop up at some point, because humans are what lead to stupidity in behavior, and there are these sort of primal urges that in terms of getting rich and using leverage and all of that sort of thing and wanting to believe in the tooth fairy, and that pop up from time to time in human behavior, and sometimes they pop up on a very big scale. Charlie?
It was a particularly foolish mess. Now, at earlier meetings, we talked about some idiot who decided that the credit delivery grocery business, like the old Buffett store, a web van, internet-based delivery service for groceries. A really asinine idea. And of course, it met an ignominious failure. That was smarter than what the people did in this mortgage field. It was a lot smarter. I just wish we had those brilliant people back that gave us webvan. Which, by the way, reminds me of my general attitude toward political developments. I have a rule, and it's as follows: the politicians are never so bad you don't live to want them back.